US Treasury head Janet Yellen made news today as she wrote to the G20 about backing new allocations of fiat IMF SDR notes. Likely, these coming notes will have a $500 billion per year allocation, and they will likely be issued for many years coming. Congress has no say in the matter, given that the U.S. portion of the loan is under $120 billion per 5-year threshold. This starting portion will cover years 2017 through 2021. The next half trillion fiat IMF SDR loan will likely be made in next year, 2022, and that too will not require congressional approval. The official U.S. Treasury line is that it wants to work with international financial institutions to, quote, help low-income countries who are struggling to respond to the pandemic, unquote. All sounds very quaint and nice until you look at the plan. The IMF is likely going to really subsidize mostly rich and middle-income countries, leaving the poor with little to next to nothing. There's no word yet on how levered up these SDR loans could get, but this is possibly the start of an IMF SDR liquidity injection into the global economy. And speaking of debt, we're going to move on and look at total global debt, which has been updated this year in 2021. We'll begin at the very end of the year 2000. The hard global debt levels then had reached $87 trillion. Today, just the global equity markets alone are nominally larger than that figure. Also recently updated, we have a new 2021 global debt level, which has reached $281 trillion. Now that little upside down pyramid you see there, that was designed by former Federal Reserve Governor John Exeter. His inverse pyramid is very famous. It's been updated. You've probably seen it on our website before. He was perhaps the final honest central banker of the United States had. We're going to look and begin it with Mr. Exeter's take on the IMF SDR back in the year 1980 when he was speaking to the Economic Club of Detroit. Here's what he had to say. When speaking to the audience, Mr. Exeter made the point that in the long run, governments are powerless to determine what money is. They have made their paper IOU nothing legal tender and prohibit people from using gold as an alternative, threaten to demonetize it, phase it out of the system, sell off their stocks in the marketplace to frighten us out of gold and back into their paper. They even invented a new monetary unit, the SDR, or special drawing right, as an international currency. Like the, quote, IOU nothings, quote, the SDR isn't a promise to pay anything, merely an arbitrary unit of account. Moreover, the SDR has neither an obligor nor a maturity date. So John Exeter referred to the SDR as a, quote, who owes you nothing when, unquote. Exeter further reminded the group that in the long run it was the international marketplace that would determine what money is. But neither Keynesians nor Friedmanites then recognized that the marketplace is not our servant, but our very master. History is clear that beyond a certain point, an irredeemable fiat currency will be repudiated by international creditors as their balance sheets become excessively bloated and subject to arbitrary devaluations by the currency issuers, in this case, the United States. John Exter told the audience in 1980 that he saw the marketplace as a crime and punishment world, whereby if you make a mistake in it, you will suffer for it. He added, but if the government or central bank makes a mistake, they suffer too. Exeter believed our central bank was making a horrendous mistake by entering into the marketplace and buying government securities. Trouble is that those who do the buying, the politicians and bureaucrats and government, don't suffer for it, he said. It was all of us, we the people, who suffer and have our futures undermined. To look at the functions of money, Exeter explained, illuminated the basic problem. Money has to function as a medium of payment, a unit of account, but its most important function is as a store of value. History, moreover, has shown us that any money that does not serve as a good store of value ultimately has ceased to serve as money. In other words, people in the marketplace will eventually refuse to accept and or hold it. Exeter pointed out that good store of value must be a commodity, especially one desirable and above all scarce. He explained that abundant things can serve the medium of payment and unit of account function, but the marketplace will ultimately destroy them and make them worthless if too abundant. John Exter added that over thousands of years, gold bullion has remained as the supreme store of value money, outstripping its principal competition, silver bullion. Side note on that, John Exter lived throughout a time when mainly silver has been suppressed and artificially rigged at low prices. So While I agree with that notion that gold is the ultimate money that John had stated, we still don't have an idea what the true free market value of silver would be if we actually had a real market and price discovery for the white metal. Here is a look at how badly the arbitrary IMF SDR unit of account has held up in value versus the four major precious metals. Top left is the longest running chart illustrating what happened once the IMF SDR was forced to untie itself to gold in 1968. Note the blue line is forever falling versus gold bullion's ongoing, still suppressed value. Top right, the last 20 years of the IMF SDR devaluing versus silver bullion. Bottom left is platinum, bottom right is palladium versus the IMF SDR since the year 2005. And to John Exter's previous point in 1980 about money having to be a store of value above all things, all other arbitrary man-made currency and monetary contrivances in value destroyed. The Bank for International Settlements has a handy monetary flower chart that illustrates this same point. On a long enough timeline, all man-made currency proxies fade in value to physical precious metals.
Hello there, this is James Anderson on behalf of SDBullion.com. Before we get rolling in earnest, do me the favor of hitting the like button here so that the algo bot knows to serve you our latest video uploads. Also, if you're not a subscriber, do so now and hit the alert bell button as well.
Best-selling author James Rickards published commentary today about this latest IMF SDR issuance on the Daily Reckoning website. We are going to read through his thoughts right now. The Great Reset is here. The Bretton Woods Conference of 1944 set the global financial system that still prevails today. The period 1969 and 1971 can be regarded as the first reset, which involved the creation of special drawing rights, SDRs, the devaluation of the fiat Federal Reserve note, and the end of the gold standard. For years, commentators, myself included, have discussed the next global monetary realignment, which is sometimes called the Big Reset or the Great Reset. Now it looks like the long-expected Great Reset is finally here. Details vary depending on the source, but the basic idea is that the current global monetary system centered around the fiat Federal Reserve note is inherently unstable and needs to be reformed. Part of the problem is due to a process called Triffin's dilemma, named after economist Robert Triffin. Triffin said that the issuer of a dominant reserve currency had to run trade deficits so that the rest of the world could have enough of the currency to buy goods from the issuer and expand world trade. But if you ran deficits long enough, you would eventually go broke. That was said about the fiat Federal Reserve note in the early 1960s. In 1969, the International Monetary Fund, IMF, created the SDR, possibly to serve as a source of liquidity and alternative to the fiat Federal Reserve note. In 1971, the fiat Federal Reserve note did devalue relative to gold and other major currencies. SDRs were issued by the IMF from 1970 to 1981. None were issued after 1981 until 2009, during the global financial crisis. The 2009 issuance was a case of the IMF testing the plumbing of the system to make sure it worked properly. Because zero SDRs were issued from 1981 to 2009, the IMF wanted to rehearse the governance, computational, and legal processes for issuing SDRs. The purpose was partly to alleviate liquidity concerns at the time, but it was also to make sure that the system works, in case a large new issuance was needed on short notice. The 2009 experiment showed that the system worked fine. Since 2009, the IMF has proceeded in slow steps to create a platform for massive new issuances of SDRs and the creation of a deep liquid pool of SDR-denominated assets. On January 7, 2011, the IMF issued a master plan for replacing the fiat Federal Reserve note with SDRs. This included the creation of an SDR bond market, SDR dealers, and ancillary facilities such as repos, derivatives, settlement, and clearance channels, and the entire apparatus of a liquid bond market. A liquid bond market is critical. US Treasury bonds are among the world's most liquid securities, which makes the fiat Federal Reserve note a legitimate reserve currency. The IMF study recommended that the SDR bond market replicate the infrastructure of the US Treasury market with hedging, financing, settlement, and clearance mechanisms substantially similar to those that are used to support trading in Treasury securities today. In July 2016, the IMF issued a paper calling for the creation of private SDR bond market. These bonds are called MSDRs. for market SDRs, in contrast to O SDRs for official SDRs. In August 2016, the World Bank announced that it would issue SDR-denominated bonds to private purchasers. Industrial and Commercial Bank of China, ICBC, the largest bank in China, will be the lead underwriter on the deal. In September 2016, the IMF included the Chinese yuan in the SDR basket, giving China a seat at the monetary table. So the framework has been created to expand the SDR scope. The SDR can be issued in abundance to IMF members and used in future for a select list of most important transactions in the world, including balance of payment settlements, oil pricing, and financial accounts of the world's largest corporations, such as ExxonMobil, Toyota, and Royal Dutch Shell. Now the IMF is planning to issue $500 billion of new SDRs, although some Democrat senators are lobbying for an issuance of $2 trillion SDRs or more. This would be almost 10 times the amount of SDRs issued in 2009 and go a long way to increasing SDR liquidity and advancing the globalist agenda of eventually having the SDR replace the fiat Federal Reserve note as the leading reserve asset. This proposal closely follows the global elite plan predicted in Chapter 2 of my 2016 book, The Road to Ruin. Over the next several years, we will see the issuance of SDRs to transnational organizations such as the UN, the World Bank, to be spent on climate change infrastructure and other elite pet projects outside the supervision of any democratically elected bodies. I call this the new blueprint for worldwide inflation. But there's more to the Great Reset than the issuance of new SDRs. Here's another breaking news story that validates the long-standing prediction of a coming reset in the global financial system. In 1999, the euro replaced the individual currencies of Germany, France, Netherlands, Italy, and other major economies in Europe. Today, the number of countries that have joined the euro is up to 19, and more countries are awaiting admission. The euro is the second largest reserve currency after the fiat Federal Reserve note. The creation of the fiat euro can be thought as a stepping stone from national currencies to a single world fiat currency. Now the euro, along with Chinese yuan, is moving quickly to become a central bank digital currency, or CBDC for short. A CBDC combines a traditional currency with the blockchain technology of a cryptocurrency. It's an important move in the direction of eliminating cash and forcing users into a 100% digital system using credit cards, debit cards, and smartphone apps. Why are China and Europe so focused on eliminating cash? I said all along, you cannot put negative interest rates on consumers until you eliminate cash. Otherwise, savers would just withdraw cash from the banks and stuff it into mattresses to avoid negative rates. Implicitly, the European Central Bank seems to agree. One of the ECB board members says that negative rates, really confiscation, will be applied as a penalty against hoarding cash. In plain English, that means they will create digital money, force you to spend it, and if you don't spend it, they'll take it away at negative interest rates. Now, all of these pieces of the global elite plan are converging. The IMF SDR issuance will reliquify global central banks that cannot print fiat Fed notes. Then CBDCs will be used to eliminate cash. Once the cattle, that's us, have been herded into digital slaughterhouses, we will be told to use it or lose it. And when it comes to our money, in other words, either we spend the money or the government will take it away. Of course, the spending can be channeled in politically correct causes by excluding unpopular vendors such as gun dealers or conservative social media platforms from the payment system. This represents total domination of human behavior through world money plus digital currencies plus confiscation. This is not speculation anymore. It's happening in front of our eyes. The Great Reset is coming. Future's here. The only solution is to use a non-digital, non-bank store of wealth that cannot be traced or manipulated. Given the planned fiat Federal Reserve note devaluation, it's one more reason to own physical gold and silver. Get it while you still can. To close tonight's SD Bullion market update, we're going to hear directly from Jim Rickards, who said the following back in the year 2017. And until tomorrow evening's SD Bullion market update, for those of you out there, as always, take great care of yourselves, those you love.
Imagine you run a slaughterhouse and your job is to kill all the pigs and cows. What do you do first? Well, you round them up into pens. You don't run around chasing cows. You herd them into pens and then you slaughter them. That's what's happening to savers and investors. We're being herded into these digital pens at a small number of mega banks, and then we'll be slaughtered with negative interest rates. So people go, I'm going to escape from the pen by getting some cash. My answer to that is good luck. You won't be able to do it. People ask me about the war on cash all the time, and I say, look, the war on cash is over, and the government won. Like, you think you can get cash. It's not illegal, but try doing it. Go down to your bank tomorrow and ask them for $5,000 in $100 bills. Say, give me a stack of $50, $100 bills. You will be treated like a criminal, a terrorist, or a drug dealer, or a tax evader. They will ask you for identification. Some banks will say, come back in a couple of days, as if you got to get your cash by appointment. They'll file, if it's 10,000 or more, they'll file what's called a CTR, currency transaction report with the government. But even if it's under $10,000, they'll file what's called an SAR, a suspicious activity report, because they say, hey, you never came in for cash before. You're doing it now. What's up with that? That's suspicious. So, and by the way, the bank tellers are trained to not give you the benefit of the doubt. Don't treat you like an innocent civilian who's trying to avoid having your money stolen by negative interest rates. Treat you like a drug dealer, a terrorist, or a tax evader, or else they lose their job because they've got bank compliance officers and federal examiners looking over their shoulder. So the whole system is where you think you can get cash, but you actually can't. Go to an ATM, take out $1,000, try taking out another 1,000. They'll say, sorry, you're up to your daily limit. And by the way, those can be reprogrammed down to $300 for gas and groceries. The government will say, hey, who needs more than $300 a day for gas and groceries? That's plenty. So the war on cash is over. The government won. You can't get your cash. You're locked into this slaughterhouse, this digital slaughterhouse, and they're going to pick your pocket. One of the reasons I like gold is because it is legal to go take your money and buy some gold. Now you're not subject to hacking. You're not subject to digital attack. You're not subject to negative interest rates. What you're doing is you're preserving wealth. You're protecting yourself against the inflation slaughterhouse, the negative interest rate slaughterhouse, and the digital slaughterhouse. That's where we're all being led. The way to jump over the fence and be free range is to have some gold.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.